Okay, so today I want to talk about a credit, a very important credit that a lot of people don't discuss or they don't know about, which is QBI. QBI stands for Qualified Business Income, and it's a deduction. So, what is QBI and why do I care? QBI, it's if let's say you own a business and you obviously have to pay taxes on whatever the net income comes derives from that business. So what QBI does, what this business credit does, it writes off 20% of that income. So let's say, just to give you an example, let's say you make 100K on your business, and that's your net income. So you would expect to pay 100,000 off of that net income in taxes. So what the QBI does, it writes off 20%. So you won't pay. Let's say that your tax rate is, just to give you an example, 21% as a business. So it says 21,000. So what it does is it writes off 20%. So you're not gonna pay the 21% based off 100K that you made. You should be paying taxes on 80K because it's gonna write off 20%. So this is a really, really incentive that as a business owner you get, and a lot of people don't know about. So there is a face-off that if you make over, I think it's 250,000, somewhere around there, then it starts facing off. But if you don't, then you really need to check with your accountant to make sure that you're getting this credit. It's super important. It's not always talked about. It's not in the tax software. They don't always show it. So if your accountant is not talking to you about this QBI, you should be really discussing it with them. Here, like for example, what I do with my client is we go over it. We look at the net income. If they don't have a business, we try to figure out what if they're doing some kind of side gig that kind of makes sense to turn it into a business. You get some write-off there. If it's active, then you can, if it's either passive or active, either way it can write off either another passive income that you can deduct, or if it's active, then it can actually reduce your W2 income. All of this is tax planning, folks. So if you know what I always recommend my clients, and you don't have to come to me, but it's go visit your accountant, go visit your CPA. Don't just go to on March and April and thinking you're gonna show up to their office and just expect a miracle, because miracles don't happen unless they're kind of swept under the rug. And trust me, you don't want to do that. You think that you're saving because you're just doing fake deductions, or you making up stuff here and there. Trust me, that's gonna bite you. It's gonna backfire at the end. Possibly you could get lucky and go for a time and not have any consequences. But first of all, you don't want to have that on your conscience where you just kind of just thinking, oh, what happens if the IRS, if they audit what I'm doing? What happens if this? You just, can't sleep at night, can't figure out. You don't know how many clients come to my office and they tell me, Julian, man, like it's hard, man. Like I can't sleep over this. Like, I'm super scared of the IRS. I feel like I'm a criminal and this and that. And I'm like, you should not feel that way. The IRS is just, obviously, clearly, it's a collection agency. They're, they throw the rules out there for you to follow, right? So as long as you're following the rules, and trust me, they give you enough incentives so that you don't pay taxes. That's the beauty of it. You don't have to do this like fake stuff. You could do things right. You can actually go by the code and take the credits and the deductions that they offer you, and you're gonna be great. You can like minimize your taxes to like numbers that you did not think you could. there's so many things. There's retirement options. There's like pay your kids options. There's so many things that you could do, but you gotta do them right. Like yesterday I had a client call me, and it's like, yeah, I want to open up my LLC, and I'm opening up my S corp. So it's just funny because it's you don't open up an S corp. What happens is an S corp is a tax. It's how you categorize your company. Say you open up an LLC, and you can either have it being taxed as an S corp, a C corp, or disregarded for taxes. But that's how you categorize with the IRS. There is no opening up an S corp. You can open up your LLC and then turn it into an S corp, but you don't necessarily need to do that immediately. If you're not making enough money, if you're making, let's say, somewhere between, usually the threshold is 35 to 40,000, you don't need to be an S corp. You don't really get that benefit. You're actually adding cost because you have to do another tax form, which is the 1120S, and you're supposed to be in payroll. So if you don't have payroll, you're not supposed to have an S corp. So all of these things you need to know. You gotta plan correctly. You need to do research, and you have to get consultation from people that know what they're doing. Blanket advice is not gonna help you, folks. Just because somebody said in TikTok, just to give you that example of that client that called me yesterday, she told me that her cousin told her that he saved a bunch of money from being an S corp. And immediately I was like, so how much does that person make? Oh, well over 100,000. Okay, well then that makes sense. Are you making 100,000? Well, no, I'm just starting. So then it doesn't make sense to be an S corp for you. Now, at one point, if you do things right, obviously it does make sense. It makes economical sense. It makes efficiency sense. Operationally, all these things is gonna make sense for you to be an S corp. If you do things right. Like, for example, one of the things is you have to be ready for payroll. So that's another expense. So if you're just starting out your business, you're probably not going to have enough money to pay yourself through a salary, right? At some point, it doesn't make sense until you're making enough, right? So all these things you got to think about. But the QBI, going back to the initial point, is super important. You got to look on line 13. So if you talk to your accountant, if you have a business, you think you qualify, ask them. Get your 1040, look at line 13, it should say qualified business deduction. You have to do a few forms like the 8995, where it kind of details basically the calculation of how you get to that 20% that you want to write off. And those forms are included on your 1040. But whatever the net amount that you're gonna save, or that you're gonna qualify for, it should show up in line 13. Now, like I said, it faces off. So if you don't see it, it may not necessarily mean that your accountant didn't do it. It could also mean that you make way too much and you don't qualify. But I mean, unless you're making quite a bit as the net from the business, you should qualify. So it doesn't hurt that you get your 1040, look at line 13, and ask your accountant. If you have a business, obviously, because it's called a qualified business income deduction. So if you're receiving income from a business, you should be able to qualify. There's certain areas or certain business that kind of qualifies. There's some that there's a little bit of a face off, but most businesses qualify. Not all of them. You have to look, or not all of them qualify for the same amount. So this is something that you need to look at. There's this thing called the selected service, which is certain services that you offer may not qualify for 100% of the credit. But your accountant should be looking at this for you. It's a big credit. Like I said, it could be 20% that you're deducting. It's a credit, so it's a total. You won't pay taxes at all on that 20%. So you should definitely be looking at. So yeah, but look, if you find this helpful, if you have questions, if you're not happy with your accountant, if for whatever the case, the what we get in our office quite a bit, which is, my accountant doesn't answer the phone, I'm not getting the right information, give us a call. Here at Upfront CPA, we offer a free consultation. Now, at the free consultation, we don't offer free advice because nothing is free in this world. We all have to pay taxes, but we can discuss how we can work with you, how we can save you money, how we operate, and we guarantee you want to at least hear what we have to offer. So give us a call. Look in the bio here for us. We're gonna have our phone numbers. We're gonna have our the link to our website where you can book that consultation. We just make it easy for you. Thank you, folks.